right, guys, it is 5:30 and we're going to go ahead and start. So, thank you guys for joining tonight. This is going to be an interactive session. And tonight is going to be the most boring session that you'll have, okay? Tonight we're going to focus on formations of business. Now, I know everybody's probably tired. You guys have worked all day, but I would like to see your faces so that we can be active. So if you can, please turn on your camera. And I believe when I sent out the email, there was a question that I asked. So who wants to go first and tell me about their answer? Go ahead, Brittany.
Okay, so you asked a couple of questions. You asked, why did I start my business?
Yep.
Is that my phone?
No, Misha, you have 2 on.
I'm getting ready to get rid of it. Okay.
All right. So, Brittany, if you want to share real quick, why did you start your business?
I started my business because cooking is my passion, and I am still trying to make a off my passion.
Okay. All right. Does anybody else want to share a little bit or no?
I'll share.
Okay. Hi, Jaime.
Hi, how are you?
Good.
So I'm in the HVAC business, and I started my business because I was kind of getting paid not what I should be for the amount of work that I'm doing, and I kind of saw that if I just find my own jobs, whether they're weeks apart or whatever they may be, the money's still there, and that comes along with freedom.
Good, good. So tonight we're going to talk about forming a business. And so that's going to be our formation section. And when I say that this is going to be the most boring session, it's because most people, when they think of starting a business, they're like, I just want to jump in. And that's fine. But if you just jump in and you're not thinking of it in proper terms or not doing what you're supposed to do legally, you could find yourself in some tax issues. You could find yourself having some legal issues. You could find yourself having to dissolve your company. So a wise entrepreneur knows that in order to open a business, they need to make sure that all of the steps are taken care of. So there's a couple of different forms of businesses you can own. So who here, by raise of hand, has an LLC? And why did you pick LLC? Can Courtney and Keisha, can you please turn your cameras on? Because this is going to be interactive. Hello, Shanika. So most of you all probably do have LLCs. Why did you pick an LLC? Azuri? Miss Winston? Azure. Why did you pick an LLC?
I guess that's the only entity that I really think about. I mean, I know about corporations, but when I think corporation, I think, big. So, because I'm a small business, I assume I should pay LLC.
Okay. And you said because you're a small business, you assumed that the LLC was the proper form for you, a formation for you. What gave you that idea?
Just the fact that when I think of a corporation, I think of a business that has employees and all those things. Because I didn't have those things in place, I just didn't view my business as a corporation.
Okay. And Keisha, you had your hand raised. You're on mute.
Yeah, I have an LLC as well. I chose it because in my research that is what everybody was recommending. That was the process, so that's what I chose.
Okay. So for Miss Winston, a sole proprietorship may be better for her. but we'll get into it. So there's a sole proprietorship, there's LLCs, and then there are corporations. Now, a corporation doesn't necessarily mean that you have to have this huge company with a ton of people. Just like an LLC doesn't mean you have to have just one person. A sole proprietorship is an unincorporated business, but it has one single owner. So sometimes we go out and we'll get these LLCs because we're like, oh, that's what we're supposed to do. But if you're just one person, you probably don't need an LLC. You can do a sole proprietorship. And a sole proprietorship is actually going to be not cheaper, but it will be. Is this okay? Okay. It won't be cheaper, but it won't be cheaper for cost. Let me say that. It's cheaper in moving forward in the business, but because it's a sole proprietorship, that means that the owner is responsible for all monies that flow through. With the sole proprietorship, you also have to think about it. It's what we would call a flow-through organization. And what that means is that all of the money that comes in, you're responsible for making sure that your taxes are done, or making sure that the business is making a profit, making sure that the owners are, or you are the owner, is taking care of everything that should be taken care of. Now, there's some advantages. One of the things we talked about is the ease of formation. So it's easier for the sole proprietorship because it's only one person, right? There's not a whole lot of steps that you have to take to just set up your own business. So let me tell you what that looks like. Let's say you are, and I like to give examples. That is because I was a professor up until recently. So I like to give examples so that people can kind of catch on a little bit more and put it into daily living. So let's say Miss Jackson her thing is, I don't know, making pretty eyeglasses. And she is working by herself from her home. And she says, I think I'm going to start selling these glasses because all of my friends really like them and they want them. And so we're like, okay. And we start buying the glasses. And she says, Renee told me about this sole proprietorship, but I wonder what I should do. You're the perfect person for sole proprietorship because it is just you. Now, if you then come back and you say, well, I don't know, I might want to make some changes. The benefit of the sole proprietorship is you can make changes. You can go back in, which you cannot do with the corporation. And sometimes you can't even do it with an LLC. It depends on the members. If I'm going too fast, stop me, okay?
What if I wanted to add my daughter into the business later?
If you wanted to add your daughter into the business, you're no longer a sole proprietorship. The purpose of the sole proprietorship is it means you work alone. There are no other employees. Now, there's some disadvantages to having a sole proprietorship. What, if anybody can think of any, what would be a disadvantage? And there are no wrong answers.
I think that when you're sole proprietor, you as an individual are responsible. From a tax perspective, as a liability, right? So if somebody tries to sue you, they will come after you personally to close your business.
That is absolutely correct. So when one of the liabilities of a sole proprietorship is that the owner is responsible for all of the business debts. So any kind of issue, let's say you decide, I'm going to take out this loan for my business. Chase is giving these great loans, or people are, I got this PPP loan that I'm going to get, even though I didn't really have a business. So you got this loan and you didn't use it for the business. But it's fine, you've been making payments, and then one day you decide, I cannot continue to pay these bills. Well, with the sole proprietorship, you don't get to just walk away. It's not a corporation. So because it's not a corporation and it is just yours, you are on the hook for that liability. So now let's jump in and talk about corporations. When you think of a corporation, Miss Winston said, I think of a corporation as a lot of people. That's not necessarily so. You can have a corporation and it can be multiple people, but it doesn't have to be Facebook or IBM. Not IBM, it's Apple now, I think. So it could be a small business. So my business is a small business, but I am a corporation. I'm a professional corporation. And what that means as a professional corporation is people like lawyers, accountants, doctors, and things like that, we can get those PCs, but that means everyone in the company has to have the same job. So I couldn't bring in an accountant to run another small business. I could not say, well, I have extra space, so I'm going to let a hairstylist come in. You cannot do that. But what I could do is say, I have extra space, I'm going to have an in-house investigator come in. What's the difference in that scenario? Ms. Wingard?
With that scenario, because you have an investigator that comes in, it basically works hand in hand with what you do as a lawyer.
Exactly.
So that you could bring that person in.
Exactly. So we have an officer joining us tonight. And what if I said, I want to bring him in. He's an officer of the law, but I'm going to bring him in and he's going to just go out and take pictures at my scenes, at the crime scenes. Could I bring him in?
I don't think so.
Why don't you think so?
Well, doesn't he belong to a different corporation since he's a police officer? Well, I
He
guess
belongs to another gang, but I don't know about a corporation. He belongs to the state, right? Because he's probably working, or the county or the village or city, because he's probably working for a local entity. So he's not a part of the corporation. Anybody else? I could bring him in, but I couldn't give him space. The reason I couldn't give him space, besides me being a defense attorney, he's a cop, but the reason I couldn't give him space is because his job is not a job that he stays here, right? He's not going to be situated in this office. So because that means he can go work for other people, right? Now, if I hired him, he didn't work for the police department. He only worked for this office. He could be here. But I've been told that, let's say, I don't know, he has his wife and she bakes very well. And because I love cupcakes, she says, well, my husband has that space over there. I'm going to start bringing some of my cupcakes and selling them. And I'm going to put them right here on in the front, and Renee, you'll just send me the money. Can I do that? As a professional corporation. Shanika, I see you thinking.
yes.
Yes?
I thought it was your business. No,
You thought because it's my business I can?
no. I thought it had to be in line with your business. No.
I'm asking you.
I don't know.
Not
Okay.
if you're giving her space.
Not if I'm giving her space. What if it's just the table in the front of the office and people come in and they're like, okay, these are our snacks. And I'm like, hey, I don't buy chips and stuff. I just buy drinks, but we have these cupcakes and they're $3 a piece.
Still give them space.
Okay.
Are you charging her?
I'm not charging her, but she's charging my clients.
It's kind of like I want to say it's more similar to a partnership. You're working cohesively together.
Well, she's not giving me any money.
True.
She's only getting the money from my clients. So that could open me up to some potential liability.
It could.
Although she is working for herself, and she's selling her cupcakes not only here, she's selling them at all the law firms, right? Because all the law firms was like, oh, Renee is so trendy, and she started selling cupcakes, so we're gonna sell cupcakes too. And so now she's selling to the public defender, the state's attorney, she's selling to everybody, right? Well, all of the money goes to her, but the client is thinking, well, we're paying the law office of Berman. When that happens, I am responsible for the taxes on that. So do we see how we got there?
Mm-hmm.
Anybody else see how we got there? Why am I responsible for the taxes and not her? Even though she collected the money, she made the cupcakes, she sold them, she dropped them off, all of that.
It's in your business.
Because it's my business.
Yes. It's in your business. It's on your table.
But I don't get the money.
She's still within your
It's still, as you
Your
said,
space.
holding place.
So it's the perception that is part of the issue. The perception is that they're paying me, right? And then I'm probably going to give them some type of receipt. And that receipt is going to come from me. When that receipt comes from me, she gets to take all of the money home. She made $1,800 this month off the cupcakes. She gets all of the $1,800, and I get the tax liability. So the reason I'm telling you all this is because when you own businesses, oftentimes people will come in and say, can I leave my stuff here? You don't want to be mean and be like, no. But you have to also think about the liabilities that come along with leaving your stuff somewhere. Now, in a corporation, you can transfer your interests. In a sole proprietorship, you can also transfer your interests. But what about an LLC? It's not even a trick question, I promise.
I'm thinking that, a sole priority is yourself. So a LLC is yourself with maybe, well, yourself. Most of us is doing it ourselves. So I'm a savior. You can't transfer your interest.
So
Not really sure, but I'm gonna, since a sole priority can, I don't see why LLC will not be able to.
So actually a sole proprietorship can, because that person is the only owner. So you could transfer your ownership to Misha, and Misha could get the business and it could fail. It could turn into a multi-million-dollar business. When it does, do you get part of that multi-millions?
If you transferred it,
Yes.
well, it doesn't mean you're giving it to her, so I would assume so.
So if I transfer my interest to you,
Then they own the interest now. So whatever they make off of it is their profit or their business. You no longer have the interest.
absolutely. But with an LLC, how does it work?
That I'm not so sure.
Right. So here's the thing.
Sell the interest, maybe?
What'd you say?
You would have to sell the interest?
You would have to sell it. You can transfer it, but you can't transfer it if you have other members. And we're going to get into the LLCs in a minute. But that question, the reason why I asked it was because we oftentimes will say, you know what, I'm done with this business. I'm just going to dissolve it, right? But what about transferring it? What about selling it? If it's worth something, and most businesses are, if it's being run properly, why not transfer it or sell it? Now, Keisha, I heard you say, I have an LLC. You don't need an LLC. An LLC probably works against you for your business. You need a sole proprietorship. Everyone with an LLC, how many of you have agreements?
That's a good point.
Agreements for,
I don't have an agreement.
Right. You don't have an agreement because you don't have anybody else, right?
Correct.
Right.
It's just myself.
Right.
I also have a sole proprietor as well.
So why do you have two business formations? And is it the same
Well,
business?
In my mind, yes. So one I was opening to rebrand, and I was told that I was under the leadership that it was best to go under an LLC.
Who gave you that
The
advice?
LLC. You say what?
Who gave you that advice?
Whew. It was a whole lot. It was a lot of time and money, a little bit of money wasted.
Okay, so then you did a sole proprietorship, and you did that
That
under
was
the L.
what I started with first.
Okay.
I did that first, and I was just reading. I was like, I ain't making no money, so why would I go get an LLC? I said that didn't make sense.
Did you did you dissolve
So
the
I just
LLC?
started doing. I have not dissolved the LLC. I'm actually still trying to make it work.
And the sole proprietorship, what's happening with that?
It's just at a standstill.
It's at a standstill. So I'm going to use another example.
Okay.
So my friend Dawn does my hair. And Dawn decides, because I told her, oh, Keisha's products are so great, buy some from her. And she's like, okay. And you have a website and you have your Facebook. Dawn looks for you on Google. She finds you. She orders $50,000 worth of product, all customized. Then she goes on Facebook and she sees you're on there and the prices are cheaper. And so she's like, wait a minute. And you're like, no, wait, I don't really use that one anymore. I use only the website. What's the problem with that?
It's giving two impressions. It doesn't look good, number one.
Inconsistencies.
Yeah.
It's inconsistent. And not only is it inconsistent, you have tax issues to think about, right? Because you have to pay taxes on that $50,000 worth of stuff that Dawn just bought over here. But then you still have people purchasing things over here from the Facebook because it's cheaper. So now you have an issue where you're possibly being double taxed. And that, when those taxes come for you, the IRS, that's serious. So that is a reason why you dissolve companies as opposed to just saying, I'm going to go under a company. And if you're going under a company, you definitely should not be making a sole proprietorship. You should be doing a DBA because you already have a business. So now what you need to do is do a doing business as. So basically you're saying, I still own this, but I'm doing business as something else. Do you understand how that came about? If you guys don't, say something. I mean, this is free. It's your only chance to get some free legal from me. So say something if you don't understand it.
Would you go through it again?
Yes. So do you need me to go through the whole thing?
The DBA, because I've heard of that, and I was also told that I could put that business under the LLC as a DBA.
But you didn't. You did a sole proprietorship, right?
Huh?
But you did not do it as a DBA. You did it as a sole proprietorship, correct?
Yes.
So,
and again, that was just not having the exact knowledge. You know, people give you information, but they don't. A lot of people don't give you the whole recipe. They give you bits and pieces, and you find out as you make mistakes trying to, listen to that person.
So part of that, and I don't want to digress too much from where we are right now, but part of that, and I'm actually kind of teaching this class the way I would teach my students, but part of that is because people give information not knowing the information. They think they're being helpful, but they're really not. and we listen to them. My saying is never take advice on how to be a millionaire from somebody who's a thousandaire. They can't tell you, right? So you have to take advice from the experts in order to be able to really move forward. Yes, Miss Bowles.
Okay, so I'm wait, say the word sole proprietor.
Proprietorship, but yes, sole proprietor.
Okay, that's what I have. I've been running my business now for 3 years that way. Now, I work at the courthouse. So my judge told me that I should do an LLC. And he said, because that way, if you're sued, the business would be sued and you won't be sued personally.
We're gonna get to that.
Okay. All right.
We're getting to that in about 10 or 15 minutes.
Okay, I'll be quiet.
Okay. Now, one of the benefits of a corporation is it can last into perpetuity. So, if I wanted my daughter to become a lawyer, she does, and then LaTanya said, I'm going to let one of my sons become an attorney. They can essentially, because they're the burr and the men, they can essentially come in and run this. And then their kids can come and run it. And then their kids can come and run it because it's a corporation. It can run into perpetuity. And perpetuity means forever. Okay. Now, there are some disadvantages to having a corporation.
You said, I'll go back to perpetuity is what?
Perpetuity means forever
Okay.
or indefinite.
Okay.
Okay. So a corporation, when we do our taxes, it's a professional corporation, but taxes go under what we call an S corp. Have you guys ever heard of an S corp?
Yeah.
Yes. What do you know about an S corp?
I don't know anything about it, but I've heard of it.
Okay.
Thing
So
of it. I think I've heard of S and C because I set mine up as a C corp. Don't ask me really why. That's why I figure out what I need to do.
you need to get rid of that C corp. And you really, based on, probably before we get done, you'll know which one you need. I hope you will know. And when
That's what I'm trying to find out.
yes, and when you all leave here, make no mistake about it, you will not be lawyers. You will not be business lawyers. But what you will be is in a better position to run your business. The reason the reason I decided to do this was because my belief is there's enough money out here for all of us. Everyone has some type of skill or passion. It's just about turning it into money, right? And if I have knowledge that I won't share, then what good am I, right? So that's why I decided to do this. So even though when you walk out, it won't be like, oh my God, I'm a master guru of business, but you should be better off than you were before you walked into these sessions.
Okay.
Okay?
Yeah.
Now, we're talking about the S corp. So the S corp works like this. You own the business and you own it as a corporation. Somebody got to pay taxes, right? So I have employees. If I paid my employees, let's say $70,000, I don't, so don't apply here. I don't pay that much. But let's just say I was paying my employee $100,000. Do you want something to drink? There's stuff in the refrigerator. So I'm paying my employees. Of course, I have to pay taxes for them, right? Yes. Not only do I have to pay taxes, but I'm going to have to pay business taxes, right? Now, clients come in with their big bag of money because the officer didn't forfeited at that time. And so they come in with this big bag of money smelling like marijuana. And I'm like, oh my God, I love the smell of this money. Thank you. Because it's money, right? Like, I don't smell marijuana. Only cops can smell burnt marijuana for some reason, but whatever. So, they bring me this money. I put it in the bank into my account. Which account does it go in?
Your bank account, or like your business bank account?
They gave me cash. Where does it go? I mean,
Your business.
What are they giving you the cash for?
case. They got arrested.
Oh, okay. Put it
Do
in
you
your,
have a separate account for the clients themselves?
Wait, you want me to put the money they gave me into an account for them?
No. So say like it's your business account for clients, but per name, or maybe I won't say separate deposit box, but a separate account that you utilize just strictly for the business, but it's for your clients.
Okay. Where do you guys put your money?
well, you told me to put it in my business account every dime I make, so I would assume you will be doing the same.
Ooh, fancy. Anybody else?
Hope it's under 10,000.
There goes the police officer.
Now,
Man, don't say nothing. Don't say nothing around him. He probably gonna come and get us indicted or something. I don't know. But at any rate, the money should never be mixed with your personal money. It's called commingling. Now, for me, I could lose my law license, but for you all, you don't stand till you lose your licenses, probably. But you have tax implications. So let me go back to why we talked about that. The $100,000 I get, I put it in the bank, and it's payroll time. So I got to start getting ready to pay my clients, right? I mean, my workers. I've paid them, and I still have $45,000 left. And I'm like, I'm just going to transfer that over to my account. Can I do that?
No.
no. Isn't that
Salary or your bonus?
Right.
I want it.
You could write yourself a check from that account.
Well, I don't write checks. I don't think anybody writes checks anymore.
You can. I think you can. Zelle from that account and put a note.
Mm-mm.
Who sees the notes?
Right. You need to keep a ledger.
I don't know, but it's there.
So,
It's legit.
okay.
What was the
So,
question again?
who's speaking? Oh, can I take the $45,000 that was left over? I've done payroll and all of that, and I want to take that money, and I took it and put it in my account. I transferred it over. Can I do that?
I would no. I'd say there's got to be some type of documentation or something that's being presented. You're going from your personal to your business or whatever it may be.
what if you're paying? Can you do it that way?
Oh, I already got paid. I did my payroll check. They direct deposited that money, and they did that yesterday, and this 45 came in today. Miss Bryant and Miss Jernigan, because we are interactive, can you guys please turn on your camera, please? Unless you're in bed laying down with your man, then don't do that. Miss Bowles?
So, 2 questions. The money that was brought into you from your client,
Mhm.
do you know for sure that it's, well, if he a drug dealer, then it's more likely than not it's drug money. So
Why do I care?
I know you don't care, but you automatically would think that it would be at least I would. So now, why is he bringing you that money? Is he bringing you that money to pay you your retainer fee, or pay you for some services, pay you for your time in court? Why is he bringing you that money?
Well, although I believe I'm sitting on a gold mine, I don't think some strange man is going to bring me $100,000 for that. So he's bringing it for services.
He's bringing it for service rendered to you.
No,
So
it's not rendered yet.
But you have a retainer.
I don't do retainers.
Okay, so now you don't do retainer. So why is he bringing you this money? Is he asking you to hold this money for him, or is he paying you?
He's paying me.
Anticipating services.
No, So he found out there was a warrant. He said Lake County Med came and did whatever they did. They raided my old lady's house, and now there's a warrant out for me because there was 6,000 Percocets in there and 3 bricks of heroin and 15 AR-15s. He said, so I know it's coming, Renee. The warrant is out there. And I'm like, all right, then I'm gonna charge you 100,000. He says, all right, and he brings it. And I'm like, ooh, thank you. I paid my payroll. So the money that comes in, I've paid my payroll. My staff is happy. Hi, Miss Jernigan. Now there's 45,000 left. And I'm like, hey, I want to go to Hawaii for 2 weeks. I'm going to just transfer this money over. Why can't I keep the money? It's mine. I charge a flat fee. I don't.
There might be additional charges later, or additional services required. This way he's covering himself in advance.
No, I charged him 100,000 for this case.
Right.
So if he gets another case, and then I say, it's like, Renee, I got a misdemeanor, and I'm like, okay, that misdemeanor is going to be 4,000. So that's another case.
So maybe quote him up to see, saying, this is, I charged them $100,000, and then they're gonna be like, oh, well, Renee, you deposited so much money. Where'd the 45,000 go? Where's the rest of it?
Right. You have to account for that money. However, now if you're going to Hawaii,
You did account for it.
but if you got 45,000 left, if you're going to Hawaii, if it's a business trip, then okay, you can use some of that money. But
Just me and my husband, we just going to just go kick it, and I'm gonna
No,
get some
you
sun.
can't do that.
I
You
can't.
can't do that. No.
Did I miss something? What if
Then,
it never happens?
Huh?
What if the case never happens?
No, the warrant's out. It's happening.
The warrant,
They-
the case.
They busting down his door right now.
Okay.
Mhm.
What's the answer, Miss Renee?
The answer is
No.
I can take that money.
Yeah.
Here's why. Here's why I can take that money. Because I've earned it. When they walk in the door and they pay, that becomes my money, right? Now, the money goes into a business account. No one pays me money and I put it in my personal account right away, right? But I can take distributions. So I get my paycheck, direct deposit it, and I take distributions. And for pay, it might look like I make $50,000. But I may take out over the course of a year another $300 in distribution. Who pays the taxes on that $300?
You do personally.
No, the
That-
business.
Nope. So the business pays the business portion. Anything else that is owed. So usually, typically with the business, you might owe a couple thousand, right? But if you've taken distributions, then you're going to pay the taxes on that. But what if LaTanya and I are partners, right? Now, what if I took the whole 45 and we own an S Corp, and LaTanya, I didn't tell her about it. I was being shady. I'm like, I'm just going to take it. Who pays the taxes on that?
You both do.
Who said we both do?
Me.
You are absolutely correct. We both do. So with an S Corp, the losses and the profits are going to be split. So if I take more money than LaTanya, LaTanya has to pay the taxes on that. If she takes more money than me, I got to pay the taxes on that. Why am I telling you all this? The reason, I'm sorry, Miss Winston, I didn't hear you. What'd you say?
But you should be careful when you do business with.
Exactly. That is my point. Because there are so many little nuances with business. It's not just, let me go to Secretary of State to get an LLC. There's so many other nuances that you can find yourself in some real legal trouble about if you don't know, right? So with an S corporation, the profits and the liabilities are split. half and half. Or if you got 4 people, however many it is. But it's going to be split between those people. So the S Corp works because when you're forming it, you don't have to have as much money as you need for an LLC. Why is that?
An LLC gives you the liability, the coverage.
So why would you need more money to start it?
Because they're protecting you. Well, like it's you're separated from your business. Like if you were to get sued or something, you're paying for yes.
Okay. So the issue, the reason the LLC is more expensive and probably the sole proprietorship is because you have to front all the money on your own. Right? So if you are starting a new business and you're starting an eyeglass business, like I think it was Miss Jernigan I said, or somebody, Miss Jackson I said was doing eyeglasses. And she has to purchase the lenses. She has to purchase the frame material, the colors that she wants. All of these different things she has to do. Because she is an LLC owner, it's just her. She is responsible for all of that payment. But for a corporation, I can get investors. I can put up my own money. Usually your partners are going to put in money. So it's going to cost you less to do a partnership or a corporation. Now, right now, a lot of us here that's on tonight probably are not ready to move into a partnership. I could be wrong, and if I am, let me know. I got you. But if you are looking into opening up a business, you really do need to make sure you're forming the proper business, because you don't want to form a business that is going to later set you up for something. What could they be setting you up for, Renee? Well, let's talk about it. Do you guys need a break?
No.
No? Okay. So I'm going to give an example. I
was gonna say one example, something that happened to us, opening the business. You know, not having knowledge. I did everything myself, opened the LLC. We was making too much money under the LLC that the tax consultant advised that we open an S Corp. We opened the S Corp, but then we didn't have either one of us as like an employee. So the first year we had to pay a lot in taxes that we didn't get anything back. But this year will be the first year that we'll actually benefit from paying the whole year of employee, payroll taxes and things like that we didn't first come in from the LLC into the S Corp.
So you said you were making too much money.
Yeah, that we was paying too much being an LLC because we was making too much. It had us paying way more than what we was, profiting and stuff due to being under the LLC for the self-employment tax.
So let me explain what she's saying. Because when people say I made too much money, I'm like, oh no, that ain't no such thing.
No, we didn't. We still trying to make money.
Right.
I'm on the road now working.
Right. But what she's saying is that because her tax liability was so high, because they were making so much money, it is better to move to an S Corp so that there's a way to distribute the debt evenly. Now, she also mentioned she became an employee of the company. Why would she do that? Why would anyone do that?
So that she can pay herself?
Well, you can pay yourself because you own a business, right?
Right. To start being able to get unemployment, get benefits, God forbid if anything, even though it's our business, but to separate for being the business.
So let me go and give you all an example, and it's going to touch on what Ms. Jones and what Ms. Bowles said. So first of all, I don't own anything. Berman is a corporation. I am an employee. I get paid on the 1st and the 15th, just like my staff does. I get a healthcare stipend, just like my staff does. So I am an employee. Now, but we know I do distributions. Now I don't really do no $300,000 distribution, so don't nobody ask me, can they borrow some money? I ain't got it. But I do the distributions. I don't own anything. But let's just say that Miss Bryant hired me for a case. And she hired me and she thought that I didn't do a good job. She wants her money back. And I'm like, kick rocks. You're not getting this money back. And then she says, oh, the devil is a lie, because she's a pastor. And so what she did was she said, I'm going to sue you. I'm like, do it. Lo and behold, I go to court and the court rules against me. Oh my God. They're like, Renee, you got to pay $40,000. It sounds kind of familiar because it was in the newspaper, but what have you. So they say, Renee, you got to pay this $40,000. And I'm like, okay. How can I get out of paying that $40,000? I don't have it. You're on mute.
Because it's not your company, it's she has to sue the company.
Okay.
You are employee, so she has to sue the company.
So she says, I'm going to sue the company and I'm going to sue Renee as well.
Well, she can do that too.
She can do that too. She can sue both of us, right?
Hmm.
Now, I say I got no money. So now she's trying to go after my business. Can she touch my business?
If you're an LLC,
But I'm not. I'm a corporation.
Okay, you go back.
So whoever, well, yeah, it's whoever's in touch with the corporation, right? Because you're the furthest away from it. You're just an employee now.
Yeah, but is it because the services that were rendered through the company, so the company has similar or some sort of liability as you do? Corporation or whatever, so she can sue the corporation just as well as she can sue you?
So she can sue the corporation. And she can also sue me.
Mm-hmm.
But now she came to the office because she was mad. She caught me walking to my car. She pulled me by my hair and I kicked her. And not only did I kick her, I broke her arm. I did like Diamond did on the Players Club, right? I whooped the tail real good. So she decides, because she's so happy, I'm going to sue this bee. And I'm like, go ahead. She says, I'm going to sue her and I'm going to sue Berman. Can she?
she can sue you, but she can't sue Berman. However, if there are cameras out there, then it's on her, because then you have evidence.
Okay, we're diverting. So don't come back.
Oh.
Okay, we're not going to go to the criminal part yet. Come back. So it is my fault because I used excessive force, because, we can do that also. But because she pulled my hair, I can't come back and break her arm. So, but anyway, I did. And
It's self-defense.
oh, no self-defense. I shouldn't have whooped her like that.
Like, she could have ripped your hair out your head, or anything.
Here's the thing. I shouldn't have whipped her like that, okay? That's where we are. So, but now that I did, she's coming after me. She's trying to sue me and my company. Can she sue Berman?
You weren't on Berman property when it happened, right?
Yeah, I was out by the parking lot.
Parking lot is the parking lot. It's not.
She attacked you first, right? She attacked you first.
It don't matter. The cops gave me the ticket, they charged me, the warrant, all of that was on me.
I might have missed the first part. Is she suing, is the original altercation a Berman issue, or is it a separate
It don't matter.
issue and you just happen to be Berman, so she know where you were?
She was mad at me because I told her to kick rocks about something, and she was like, whatever. She wanted her money back for how I represented her. I said, nope, kick rocks, get out of here. Then she came back later. She pulled my hair as I'm walking to my car, and then I turned around and said, no, and we fought.
Mm-hmm. Yes, she.
It's on you. Oh, I'm sorry.
I think that she can. Well, I don't know, because you're the owner. I would think that she could sue you
or in Berman as a representative of the company, I think.
Okay. Ms. Bowles?
Oh, she can, as far as I know, she can sue Berman, and she can also sue you personally.
Mr. Tolber, you was about to say something. No? Are you frozen?
I apologize. What was the question?
You were about to say something, right?
Yes, I was gonna say that, based on the circumstances, I would say she can only sue you directly. I would say she cannot sue the company because whatever the issue is, it doesn't have anything to really do with the company. And you guys' personal battle is between you guys personally, unless the business somehow is involved, which in this particular incident it is not. I would say that it's just between you and her on lawsuits.
You're right. It's just, go ahead.
Me? My turn?
Yes.
Okay, so I would think that she can sue you personally as well as the company because she came to you because she wanted her money, but she felt that you did not represent her in the way that she thought you should represent her. She maybe lost the case or whatever. And so, therefore, you are an employee of Berman. So, yes, she can sue you. I mean, it might get thrown out, that part of it, but she still can sue you too, personally. So she can anybody.
My only thing with that, with the lady is not, I wouldn't say when I said Berman, I'm thinking because you are at work representing the company.
No, I was going home.
Now, if you were at home or something.
I was going home. I was walking to my car.
Then it's different.
But I was in the parking lot.
But you're off work, you're not a representative, an acting representative of the company at the time of the incident, so that is your problem.
Well, I had on a jacket that says Berman Law Group and it says HNIC. It don't matter?
No, I don't think so. I think only because it was not during the capacity of work.
I think maybe she can sue you for the services of not feeling like you represented her well, but maybe not for like assault. She, started the physical altercation.
So here's the answer. She can sue me. She can sue me personally, right? Now, if she wants to come after Berman, she has to show by doing something we call piercing the corporate veil. So she has to show why Berman would be liable. Meaning, Renee took my money and put it in her personal account. She commingled funds. Or Renee dragged me inside the business and beat my tail. But because I got her out there by my car, you can come after me. But what if she comes after me, she gets her judgment, everything is good, and I'm like, I'm not paying her. And then she's like, well, I'm gonna take you back to court and I'm gonna do a rule to show cause. And then I say something like, okay, I'm gonna file bankruptcy. Can you do that?
Yeah, you can. Yep. You can do that.
But then what does she get?
She doesn't get anything unless the bankruptcy is lifted. She doesn't get anything.
So you tell me all this woman got was a well-whooped ass?
That's right.
Okay. All right.
I guess the way of explaining this that everybody seems to understand very well is if I'm on duty and I cause some sort of harm to someone, excessive force or whatever the case may be, they can sue me and they can sue the police department. But if I walk out of work and I'm off duty and you caught me and you even want to talk mess about what I did to you on duty, you try to fight me off duty and I'll whoop your behind and break your arm off duty, you can sue me, but you have to show cause as to why this has anything to do with the police department that I work for in order to sue them as well.
Absolutely. Now let's piggyback off of that. Now it's an LLC. It's not a corporation, right? And same scenario.
Yeah, because you will be the company,
I will be the who?
the LLC, correct?
It's the LLC.
Yeah.
Okay.
But isn't that a limited liability company? So
I think like, well, my understanding is that LLC and you are two completely separate things. I am Jimmy Gonzalez. My company is VIP HVAC, and that's that. Like we are separated. Even though I may be the owner, I am not. I'm not entangled with VIP in any way.
In no way, shape, or form. No money goes from VIP to your account. When your clients pay, it goes into VIP, right?
Right.
And when you pull up to their home, you're not pulling up in your personal vehicle, are you?
Correct. I'm not.
And you are you licensed and bonded?
I'm licensed, not bonded.
And so you're telling me if you came to my home and you were fixing the furnace and you brought your helper and your helper stole my diamond ring, which I don't know, I can't sue you?
No, you can't sue me.
The company.
To the company, but you cannot sue me personally. None of my personal assets are not tied to my company.
Jaime, you make me so proud. You're right. So in an LLC, the owners are not responsible for the debts of the company. But in an LLC, the company is responsible for the torts of the company. Do you all know what a tort is?
can you say that one more time, please?
So in an LLC, the owners are not responsible for the debts of the company, right? Because it's just like Jaime explained, that is the company. But the company is responsible for the torts of their employees. A tort, yes, a tort is basically personal injury, or a tort would be, because I don't do civil law, it would be, I don't know, maybe me smacking you. And so that's something that if you sued for, I didn't have any right to smack you. So you could actually sue. And if you got slapped here, you can sue the business because that is a tort. That is not something that happens in the normal course of business. That was me being violent. So that part I can be sued on. I was gonna go a little bit deeper, but I don't want to confuse you all. Any questions on that?
I do got a question.
Okay.
I remember you explaining something before about a LLC and the business being separate, and you made some type of statement how I can't remember how it went, but how your company is protected or you're protected by having an LLC.
So if you have an LLC, you're not responsible for the debts of the company, right?
Right.
Because you've in a sense incorporated yourself. So what you're saying is, hey, I own this business. But there is a way that if you are not conducting business over here properly, over here I can do what's called piercing the corporate veil. So let me give you an example of that. Queen Bee's Catering. It's doing good. It's blowing up. Got food truck now. Got a fleet of food trucks. And she's at every festival, everything. She's got brick and mortar being built. Everything is good. Now, and all of that being said, Brittany decides, I'm going to just take some of this money and put it in this account. Or just Zelle me the payment. And then her customers are like, okay. And they Zelle you the payment. And then you have, I don't know, Miss Bowles come to you and say, I'm going to go ahead and have this event and you charge her 10 grand for the food. And she says, okay, and she pays you in your business account. So we have some money going to your account, some money going in the business account, right? Now, someone's eating your food and there is a giant rock in it, and they cracked their tooth. Now they're coming after Queen Bees. And Queen Bees is like, I'm incorporated. You can't do nothing to me. Can they? And they don't just want Queen Bees catering. They want Brittany too.
If I have an LLC or if I'm in a corporation.
You're in the LLC.
If I'm in the LLC, they'll have to sue Queen Bees.
Okay. Anybody else?
That would be, I think they can because she makes the money.
Anybody
Is
else?
it this right? She had some in one and some went personal and some went in her business account. So once you mix the money, now you involve yourself, and I think they can do both. Only in that case, the mix.
And that's what I would say, they commingle.
Yep, that's exactly the issue. So now the company is going to do what we call pierce the corporate veil. And we're piercing that corporate veil because we're saying, no, judge, she commingles money. This money, one client is paying over here, another client is paying over there. This is all the same person. I don't care that she has this LLC. This is all one business. And if she's doing shady business, then that's on her. But, judge, she is doing business as Queen Bees, but money is going somewhere else. And would the court let you pierce the corporate veil? Probably. Now, when I say pierce the corporate veil, what I mean is the court is basically giving the plaintiff, I'm trying to say it in layman's terms, is giving the plaintiff, I was going to say leave. Well, leave. And Marsha, I know you know what that means, but the judge is giving the plaintiff leave to say, you know what, you can go in and you can sue Queen Bees and you can sue Brittany. And so that is the reason that's important is because oftentimes when we're running businesses, we're just in the business of, oh, I got an LLC, I'm a boss, I'm this, I'm that, and there's so much more to formatting your business. Because if you don't format it correctly, you will find yourself in some hot water. Any questions on that? I promise you, next week is going to be so much fun. The last one is going to be the best, but this one is just getting you in the door, getting your business formed, okay? Now, LLCs, let's talk about these operating agreements. Do you need it?
Yes, we do.
Why?
To protect my business and the consumer.
Okay. Anybody else?
Multiple.
Go ahead.
I didn't hear you.
Yeah.
Multiple owners.
Multiple owners. What he said. So you do need to have, I'm sorry, I was looking at the chat. So you do need to have an agreement, but it has nothing to do with your clientele or your consumers. That agreement is for you and the members of your company. Now, your members is not your employees. We know that, right? Your members are the people that you own the company with. So an agreement is beneficial because that agreement is going to lay out what happens in a succession. What happens if there's some tax liabilities? How do we transfer? If we can transfer, that agreement will show or should show everything that the business can and cannot do. Now, do you have to have it? No, especially if you're just one person. But if you're just one person, we need a what? I've been saying that all night. Sole proprietorship.
Sole proprietorship.
Right. But if you have an LLC, you don't necessarily have to go back and then do an agreement. But it's good to have, and you can do it at any time. Because if you pass away, what happens to your business?
It'll just be in limbo or something since you don't have any documentation.
Possibly.
Or dies out.
Probate?
Go ahead.
What about a will?
If you have a will,
Okay.
but a will is not a good way
Copy.
to dissolve a business. That's to dissolve your personal assets, but I wouldn't dissolve a business through a will, because although you can will and give your portion away, if it's shared by someone else and there is an agreement in line, you may not be able to do that. That's why the agreement is important.
So I hear a lot about a trust. Would that be considered a factor in this trying to like pass it on?
So that's a little more in depth than where we're gonna go tonight. But I will say this: if you have property and you have children, a trust is necessary. If you have some questions about it, you can call me. There's a $300 consultation fee. But if you have some questions about it, you can call me and I'll explain it to you. But that's not a part of this free seminar. Any other questions? Okay. So you have your LLC, you have your agreements in place, and you have 3 other partners with you, 3 other members for the LLC. And then one day you woke up and went, I don't even want to do business with this mother effer no more. Cool. And you're like, you know, Renee was interested in my company. I'm going to transfer my shares to her. Can you do that?
If there's no operating agreement, yes.
Okay. Now, if there is an operating agreement and it's silent on that, you can still do it. But your answer is absolutely correct. Now that you have transferred your shares, what happens to your funds?
They would roll over to you.
They could. Or you can try and say, well, I'm going to keep the assets. Probably not going to work. But yeah, they would roll over to me. What if you decided, well, you know what? Instead of paying me for the services, I owe Renee some money. Just pay her. Can you do that?
I don't think so because it's personal.
Okay. Shanika, were you talking?
I was thinking out loud, like if it's in your agreement, but I don't know.
Anybody else?
Once they're in possession of the shares,
Wait, I couldn't hear you.
once they're in complete possession of the shares, but not before the transfer, like, they can't allocate to pay you out of it before they receive it.
No, he doesn't feel like going through that. He's like, look, I owe Renee some money. Just go ahead and pay her. You don't have to pay me. Here's her Apple Pay. You can do that.
I get it.
You can do that. That's called an assignment, and you can assign your assets to someone else. That does not mean you've assigned your share in the business. It only means you've assigned your assets. We got it? We understand it? Yes. Can I go on?
We're here with you.
You here with me? Okay, all right. We talked about piercing the corporate veil. Okay. I'm sorry, guys. Just give me 1 second. What about capital? How do you get capital? That's something everybody want to know about.
I was about to say, please, well, do tell.
So we're talking about capital and forming now. When we do profitability, we're going to really hit on capital. But how do you get capital for your LLCs and your corporations? Like, what's the first thing you think of?
I was thinking of like an investor.
An investor? Okay.
Fine.
Loans, grants.
Loans and grants are always good. I try to steer people away from loans, and some of these people are gonna be arrested soon for these grants. I can't not wait so I can get paid. But and please let them know I represented some people for PPP loans, so I'm pretty good at this because it's coming. It is coming, and I'm gonna be so
It
excited.
sure is.
Yeah.
But you know what, Renee? So when I started my business out of my pocket.
Mhm.
And the first year I was in business, I was audited because of all these PPP loans. And the person who audited me just happened to live right here in Zion. And she was like, I'm like, but they needed to know where I got my money. How did I go about doing everything I was doing and all the money that was coming in? How did I make that money? And I was like, but it was out of my pocket, but I had to account for that money.
Sure do. What the feds
Yeah.
are knocking?
How did you get audited when you filed your taxes or?
I filed my taxes, and then I guess I was supposed to file a SR. I got it written down someplace. I was supposed to file a SR 11 or whatever it is every month, and I didn't do that every month. So I was supposed to be paying taxes every month, but listening to someone, I was sending them money every quarter. But I didn't really know what I was doing. But I'm thankful to that auditor because she walked me through exactly what I needed to know. So you definitely have to have you a CPA.
So what you're saying is, I'm sorry.
I was asking, is she a sole proprietor?
Yes.
Oh,
But they needed to know where I got my money from. They just didn't believe it, that I came out of my own pocket with that much money. But I did.
So,
Mr. Did that typically happen?
well, I don't know what kind of capital she was dealing with. Usually no, but she said it was at a time during COVID when,
Yep.
fraud was rampant. But what I will say is that there was something you said. Damn it, I'm gonna have to go back to it. But when you have these, first of all, if you're gonna run a business, part of your formation is go find an accountant. Don't go to Miss Betty who. Well, I say Miss Betty. I don't mean your Miss Betty, Brittany. Don't go to Miss Betty, Miss Shirley, Miss whoever, Miss Smith, who know how to do my taxes, because you're doing something different with business, right? So don't go to them. Go to somebody who specializes in business taxes. But before we go there, we were talking about capital and raising capital. So when you are in a partnership, what if I didn't have money to pay my employees? How do they get paid?
If you don't have the money?
Yeah, nobody came in and brought me a bag of money this week.
That's where your capital would come from.
That's my working capital. So how do I pay my employees?
So you pull up.
Well,
Say a loan or a grant.
Well, the grants take too long unless some of these other folks. But the grants take too long. So, how do I pay? Let me give it back to you. It's your business. You don't have enough money. The car broke down. Nobody paid. Nobody ordered the glasses this week. How do you pay the employees?
That's sometimes when you're
If you don't have them, they won't be able to get paid.
Wait, what?
Can you?
I said, if you don't have it, they won't be able to get paid.
No, you got to find my money from somewhere now. Because it's going to be a fight.
you're coming out of your pocket from what you made.
You got to come out of your pocket from what you make. Yes, Ms. Bowles.
So I was going to say, can you use part of your business or something from your business as collateral?
If someone wants it, yeah. But
No, I'm saying go get a loan, a short-term loan.
you could do that. What I'm trying to get to is what someone else said. It doesn't matter where that money comes from. You got to pay it, right? And you got to pay your employees on time. Here is why that is important. I can go back now to what you said, Marsha. You said you didn't know that you had to pay monthly, you were paying quarterly. So there's something called your 941s, and your 941s is basically what you've paid in your taxes. I want you all to remember this, right? If you don't remember nothing else I tell you tonight, if you're running a business, remember this, okay? You pay taxes, especially if you have employees, every time they get paid. So you know how FICA and all of that stuff comes out of your check? That is every pay period, right? And then every pay period and every month, those taxes go to the government. Every quarter, you get what's called a quarterly tax report. And that's going to show you what you've paid from June to July. August to September, however it goes. But that's going to tell you what you've paid for that quarter, right? You have to know that so you can do your taxes for the year. Now, you can't do personal taxes before you do business taxes. Why?
I would like to know. That's a great question.
Okay. I know we're moving around a lot, but you guys have some good hypos, so I'm just trying to jump in and fit it in. So, anybody else?
Well, I know with me, since I'm a sole
Proprietor. It's okay.
proprietor, my taxes, I was at the beginning. Once I got audited, I was paying monthly, and then they said, "Well, you're not really making that much money. The majority of the month." So now they put me on. I only have to pay once a year, and it's due January 20th of every year. So I think they just want to make sure they get their money before you get yours. I don't know.
That, and let's think about this. So when you
And you have to wait for the full calendar year for the revenue to cycle through to say exactly what for personal and business, since it is quarterly and optional, sure, yearly.
So really, I would say this. As a business, especially with employees. Now, if you don't have employees, you can maybe get away with it. But if you have employees, you have to pay your taxes monthly. Because if you don't, you will screw up your employee. Meaning when they get ready to go file taxes, they're going to have a slew of issues, right? So you have to pay those taxes monthly. And you can't be late. You can't say, I don't have the money today. I'm going to pay it in a week. Why is that? Because it puts your employees in a bad space with the IRS, which means that now you're going to be in a bad space with the IRS. So those taxes have to be taken care of. I am talking to you all about the formation of your business, and I'm kind of giving you bits and pieces here and there, but all of these things work together. You cannot just set up a business and say, oh, I got my LLC. Oh, I got my corporation. You have to do more than that. So it's the proper setting up of bank accounts. How you're going to get paid. Like sometimes people be like, oh, I'll just take your card on my phone. No, you won't. You need a proper way to get paid. Those little square boxes, they work a little bit, but you got to get a good payment software, because some people don't want to, especially in a cashless world, don't want to just hand their card over to anybody, right? So go ahead.
My business account is with Chase, and but I don't have a physical square. It's on the Chase app. Like if I get a card payment, I'm doing, and people, I didn't think about it till you said it, but people are, when they come in to get food, they're like, you gonna do it on your phone? And I'm like, yeah, it's right here on the Chase app. So what do I just act? I thought that was the new thing to make it more convenient.
But convenience is not always good for a business. Convenience might be good for the consumer. And you can't think like the consumer. You have to think like the business. You also have to think about your liability and taking cards on your phone. Here's why.
Yeah.
Like I tell people, do not text me, even if you know me. Don't text me legal stuff on this phone. It's not protected by attorney-client privilege. If I lose it, the cops get it, they might know where my clients are before I know. So you should not be keeping those things on your phone, because if you lose your phone or you get hacked, now you've let your customers get hacked.
Mm-hmm.
But Chase
With
does
Bank
have
of America,
go ahead.
with Bank of America, when I signed up for business bank account, they came with like all the knowledge of, okay, so do you want to set up this type of way to get your money going through? So if you have a brick and mortar, we have this software that you can use. They literally almost tried to like lay the foundation out, almost just about. They tried to give you what are those things? Little cashless options, but not doing it on your phone or anything like that. Just allowing you them options. Like they have a multitude of options that you can use.
Why do they have
Other
all
than-
those options? What's in it for the bank?
Well, of course, money.
Don't
Money.
charge you monthly fees for those things? Did they say?
I don't know. No, wait.
If
Hold on. You should know the answer to that question if you got something from Chase.
I don't get charged any fees because I chose a plan where if I get a certain amount, I don't pay any monthly fees. That reader that's on my Chase app, it doesn't charge me anything. Yeah, it don't charge. It charges the consumer. I take that back. It charges
Right.
2% every time I charge.
yeah,
Right. Because
But
when you
me,
said,
the bit, it don't charge me.
well, let's talk about you, the business. So I swiped my card for $300 and you charged me $323. Where did you put that $23?
Oh, I don't see that $23. I just see the 300. I don't even get that money.
So what you're using, they take it from the top.
Mm-hmm.
Okay. Most companies don't work like that. Like most of us are paying per swipe or per enter. Probably because you have it where you're only using your phone, they're taking their money off the top. Typically, most companies will bill and pull the money out from the fees at a separate time of the month. So what you have is actually good because you don't have to worry about the fees of it per se, but you got to worry about, would a consumer feel comfortable enough to give you their card to type it in on your phone?
Right.
And you have to weigh that.
and most consumers, because if I'm swiping my card and you're telling me my fee and the taxes included with your service is $300, I want to know why I was charged the $23, and then if I can't get a definite answer, I want my money back.
Mm-hmm. I have to tell them like it's gonna charge you 2% if you swipe your card, or you can Zelle Queen Bee's Kitchen, or for no fee at all. So they typically end up Zelling or giving me cash. Some people, they don't mind the swipe and an extra 2%. What do you suggest though, Miss Renee?
I suggest whatever works for your company. Now, I would not suggest putting cards on your phone, because once you take my card and let's say I order a 75-inch TV and I'm like, no, she took my card and she used it.
Yep, they do.
I know. So
I got.
go ahead.
Oh, so when I was audited, the IRS lady, she told me that if a customer uses their card and there's a fee that the seller is required to pay that fee, not the customer. So just like when we go to like Walmart, to the nail shops, and they won't use your card, and they say, "Oh, I have to charge you 3%," but they're supposed to incur that fee, not the customer.
No,
Is that right?
no. So you can pass it on to the customer. I absolutely pass it on to the customer, because think about it. People come into some businesses and they're paying thousands of dollars, right? I don't want to be responsible for those thousands of dollars in fees, because if I charge 3% on 85,000 on a credit card, that's a lot of money, right? So I don't want to be responsible for that. I pass it on to the consumer. However, I, at the end of the month, have to have that money for the company. So however it comes in, I have to be able to pay it at the end. So you can absolutely pass it down to the consumer. You just have to make sure when it is time to pay the bank, you can pay the bank. That's what that means. But it doesn't mean that you can't pass that on to the consumer. And as small business owners, you probably should, because most of us cannot afford to take that on.
I got one more question about taxes, if that's okay.
We do, because this is actually the time where we're going to do question and answer, probably for about 20 minutes, and then we'll be done.
Okay. With having an LLC, is there a certain amount that you have to have made before filing your taxes
No,
for business?
no, not that I know of.
Okay.
But again, I am not a tax law, and I
Okay.
never taught a tax class. I teach business law.
Okay. I wasn't sure if that was like a thing. You know what I'm saying? Like when you file personal taxes, they tell you even if you only made $10,000, you could still file your taxes and get a return. You know what I'm saying? I didn't know if it was like, this will be my actually first time filing taxes for my business. So.
Anyone else have some questions that I didn't answer, or something that is, pressing, and you're like, maybe she could tell me this? Or why do we do business like this?
Can you just repeat the statement you said in regards to the taxes? You said it needs to be paid every payroll, for every payroll period, but then every quarter. What happens again every quarter?
So when you pay your employees, what you're doing is you're making sure that their taxes are covered, right? Because FICA and all of that stuff comes out. So what you're doing is every time you pay them, if you use a payroll processing company or you do it on your own with QuickBooks or whatever, you have to take out those taxes and send them in to the IRS, right? And you got to do that every single pay period. Because if you don't, when you get ready to file your taxes, or your employee gets ready to file their taxes, they will not have, they won't be able to show what came out, and they'll have a higher tax liability. But 941s are your quarterly taxes. Every business should be paying quarterly taxes.
What is it called? What?
It's 941s. And every business should be paying quarterly taxes. So when you get ready at the end of the year, if you ever need a loan or anything, they're going to ask you for your 941s. And the reason they're asking for that is because, one, they want to know how much money you're expending on employees. They want to know how much money you're expending on payroll, because it's not just the money that goes out to employees, right? You got to account for what's coming in and everything that's going out. So your 941s is basically going to show what you've done in your payroll and what your business should have done in taxes for that quarter.
All right, thank you.
You're welcome. Anyone else?
You said 941, but I don't have a 9. I don't do 9 because I'm a sole
proprietor.
And proprietor. Get that word down.
Right.
I don't do that, and I only file my taxes once a year, which is January, they're due by January 20th. So, and it's SR, oh shoot, I'm gonna pull that form, I'll have it for you next week. But, I don't do that, I don't have the employees and all that.
Right, and that's why you don't have to do it, because you don't have employees. But for people who are opening up companies and they're going to have employees, even if you have two, that's something that has to be done. But when you're a sole proprietorship, no, you don't have to worry about that because it's just you, and you're going to be responsible for all of the tax liability on yourself.
Yep.
Now, when you're forming a company, let's start from the beginning. First thing you want to do is have your business plan together, right? Because if you need loans and things of that nature, investors, you got to have a strong business plan. Now, your business plan, I mean, it doesn't have to be a big, thick binder, but it has to be something to show your goals, your 5-year goals, your 1-year goal. Why are you doing it? How are you going to do it? What's it going to be like when you do it? So you get your business plan together. After you get your business plan, you need to decide what type of company you're going to run. If it's just you, all you need is a what?
Sole proprietor.
Sole proprietorship. If it is,
Yep.
Yep. If it is maybe you and a couple more people and you don't necessarily want to do a partnership, what are we going to have?
LLC.
Yep. Now, if we decide to get together and me and Miss Jernigan are just working together, and we have never decided that we're going to be a partnership, but we're splitting everything, the losses, we're splitting the gains. What are we?
Corporation.
We're a corporation, whether we know it or not, we are. So now we've determined what type of business we want to form. So we know we're going to go to the Secretary of State and we're going to get that taken care of. Now, what's your next thing you want to do? You got to get your EIN, your tax number, right? And then once you do that, you can open up a business banking account. You can't do one. You can't do the business banking account without the EIN number. So now you got your business bank account. What's next?
You gotta, get your,
Get your who?
well, I know for New York, you had to place ads. Like, we had to put ads in the penny papers, we had to run ads that we had to do.
I missed the penny saver.
So what I had to do was I had to go and acquire an assumed name. And then I had to take an ad, I had to have it published for 3 weeks. And then once it was published and it came back, they sent me a certificate with the name of my business.
Okay. So
Right, yep.
now we've done all of that. Now keep in mind, what's going to look like for a corporation, what's going to look different for a sole proprietorship, might look different for an LLC. For an LLC, you should not have to put something in a newspaper. But I don't know, maybe that's a new thing. But I never heard of that in all of my years of teaching business law in Illinois. I've never heard of that. And I can't imagine that all of these people who are having LLCs and bosses have done that either. So what's next?
Insurance.
Maybe insurance, but we might be a little early on it, but we could be on insurance. Are we having brick and mortar? Huh?
Like become bonded?
You might not need to be bonded. What type of business do you have? Are you going into people's homes? Are you washing people's cars? Like, what do you need to run your business? What is your next step?
Right, your supplies, inventory, or whatever, knowing maybe what distributors or what places you plan on getting your things from.
Yes, ma'am. All of those things. Now, when we talk about suppliers and distributors, I know sometimes people will be like, well, I'm just going to go to Walmart. I'm just going to go to Sam's. It's cheaper for the moment. But in the long run, it is not, right? Because you end up paying more money. But you typically would have to do something like that if you are working with limited capital. So what happens when the capital comes into the business? Do you just take it and bleed the company dry? No.
You put it to the company.
You put it back into the company. Your first probably 2 or 3 years of business, you will not make money. you will hardly pay yourself. But I promise you, if you keep consistent, it will come. Any other questions for me?
Yeah.
I didn't hear what the ending part of what you just said, Mr. Nam. So
I said, if you keep working at it, I promise you it will come. You might not make money in the beginning, but if you are consistent and you keep working, it will come.
Mm-hmm. And that's like any other business. You also have to advertise, create your website.
That's for the last week. That's branding. We're not at branding yet, Miss Jackson. Don't try to take my thunder.
I'm sorry.
But overall, I think, like I said, go ahead, Miss Wingard.
I wanted to know, is it, or would you recommend going from, if it's just you, would you recommend going from a LLC to a sole proprietorship, or is that even possible?
It is possible. And the correct way to do it would be to dissolve the LLC and then open the sole proprietorship. Or you could do a DBA, but I wouldn't do that. You know what a DBA is, right? Doing business as.
Doing business as.
Yep.
So I was gonna ask something similar to that and make sure what I needed to do with mine, because I did start it as a corporation. So would I just dissolve it? Do I dissolve and go to a LLC or a sole proprietorship
So
for the, and it's as a it's for my real estate company, and then also to do one for the loan officer company that.
but Misha, if I know, Keisha, can you mute yourself? The TV is playing in the background. Misha, if I